Okay, recording video after close of trade. Thursday, the 28th of May, 2020 is just coming up to 6:45 p.m. Chicago time. Do hope your trading is going well. So today we had a beautiful example of a pump and dump setup, and I want to show you that on my charts. And then I'm also going to show you a couple of longer term charts which show the inverse of that pattern, which is a V reversal pattern. So let's get to the charts. First of all, this is my day trading setup. Normally, with the day trading charts, for whatever reason, I have them set up, one above the other. Sometimes with some of my charts, you see them arranged kind of side by side. That's kind of more traditional. On the right-hand side here is everything to do with price and the beta sine wave indicator. Beta sine wave calculates the cycles in the low, intermediate, and high time frame, and plots on the price bars themselves the support and resistance based on those three time frames. These little light lines are the lowest time frame. The intermediate time frame is shown by these slightly bolder lines, and then the really thick lines are the highest time frame. And then we use breaks of support and resistance to calculate uptrends and downtrends. And downtrends are painted in white, and uptrends and strength are painted in bars are painted in red. And then on the left-hand side here, we have beta pro-am and beta momentum. Beta momentum is showing us the swings in volume momentum, and then beta pro-am is showing us the professional and amateur activity based on average trade size. Amateurs are painted in yellow, and blue professionals are painted in blue bars here. So normally, for whatever reason, I have them kind of set up horizontally on my day trading charts. Obviously, when this is filling the screen, it looks kind of great. It looks pretty squashed up like this. But what I want to show you today is this trade that's set up about 1 p.m. We had a change in trend, and this is a classic pump and dump signal, and you will see this. It's all to do with professional activity. So let's get into that and kind of show you exactly what was happening at that time. So the market's kind of making new highs, and we have a little bit of weakness kind of sets in here. And then all of a sudden the professionals step in and they just buy everything in the stack above them, and you can see the average trade size pops up. That's why we have blue professional bars showing professional activity are in there. We break to new highs. We probably pop a couple of stops kind of up here, but it happens really quickly. And then equally on the downside, all of a sudden it's dragged up the queue behind it of all the bids, and they just grab it all on the way down here. Just everything that's sitting in the stack kind of below, the queue below, they just grab, and the average trade size kind of pops up, and we get this kind of V pattern, inverted V pattern. I call that a pump and dump. So all of a sudden they pumped it up, and everybody's thinking, oh, I thought we'd maxed out at 64. We'd started to lose a little bit of steam and so on, and all of a sudden we're breaking a 65, and everybody's thinking, well, this thing's just going to keep on going to the moon until the end of the day. And no, they've used all of that kind of psychological energy that's been reversed, saying, oh, we're actually going higher, and they just sell everything there, and that's the top of the day, and we just have a really nice kind of downtrend market after that. But let me show you what's happening on beta sine wave at the same time. So you can see here, this is the pump and dump going on here, bang bang, and we put in a nice pullback to end of trend on the intermediate time frame. I always talk about the pullback to end of trends rippling through the time frames. So here's the pullback to end of trend on the lowest time frame, showing a left shoulder of a shoulder, head, shoulder kind of move. Then we go through the intermediate time frame, pull back to end of trend, signaling like a head of that move, and then we start to weaken after that. We've overshot resistance on the highest time frame, so we're ready for a change in trend. A little bit of weakness here, but that was when the professionals stepped in and gamed it up, and then we start breaking into a downtrend right at this point. The actual break happened around kind of 60 and a half here, below support on the beta sine wave indicator, and it was also this support level here, 59 and a quarter, which is a trailing stop based on the professional activity that I use to get me on the right side of the market. So we broke those basically at the same time, and therefore, because those two trends changed, one based on volume and one based on price, the combo indicator here behind the bars themselves goes into reversal, and we reverse into a confirmed downtrend. We had been a confirmed uptrend with the background painted red, and then we break into a confirmed downtrend when the background is painted grey. We go through these periods where we kind of go dark between trends, the uptrend here and the downtrend here. And all that's showing us is that one of those trends have gone out of sync. The two trends are both sinking down at this point here. One of them goes the other way, better sine wave actually kind of flips momentarily into strength, and so we go dark, and then when they both kind of come up and line up again together, we start kind of plotting the background as grey when the two trends are confirmed and going in the same direction. So classic activity by the professionals, they pump it up and then they dump it at that point. So the trick to trading this is to kind of get in early after that dump kind of move. We go through a couple of iterations of kind of retests kind of back. And I actually started recording this trade as I was taking it, but then I got shook out and I thought it was kind of not going to work out as I expected, and then had to reverse and go short again. So it actually worked out to be a good trade, but I wasn't recording myself during the whole trade, just the early part of the trade here. But you can see here as we start to break into weakness, the move is being led by the amateurs, and this is why we get Rambo patterns. Potential reversal of an amateur breakout, that's what Rambo stands for here. So the move is being led by the amateurs at that point, and when we get those Rambo patterns, we often get bounces back off here. So because the amateurs are selling down this move, they've kind of seen it kind of early, it's forced back and go the other way in order to shake them out at this point. So they're, we're going back almost to the highs back here. By that point, the amateurs have said, oh, I've got this wrong, I'm getting out, their stops have been busted or whatever. And so that retrace there is often seen after we get a move being led by the amateurs with Rambo patterns here. Comes back into what I call under the lip here. So we broke into a new downtrend. This is the first move. The lip is kind of coming over this, and we go back down. We get another move back, retrace back, and this one's being led by the amateurs. So the amateurs are thinking, well, maybe this thing isn't going to break down by the end of the day. The trend's going to continue up strong. So we're going to better get kind of long into this move, and they're wrong. Goes the other way quickly, moves down to exhaustion sell. So I got this part of the move correct, but then it started to make a really pretty serious retracement back here, and you can see on better sine wave we broke into strength during this whole activity here, which is why the pattern, the combo trend indicator went dark at the background here, because nothing was lining up at that point. And this is where I started to have my doubts, and all of a sudden when we did this in a little kind of V move like this, I got out of my original kind of short trade and thought, I'm wrong, reversed and went long. No, wrong thing to do, and I knew it was the wrong thing to do as soon as this pattern kind of came in here. So we had the last time the professionals were active, they were pumping and dumping. And then the amateurs leading the way, they're getting shaken out at this point. And then we come back exactly to where the professionals were kind of the last point that they were interested in selling it down at that point, back here up at 61, 61.5. And there's the blue professional bars come in. I think there's two of them there, bang, bang, 1, 2. And they just use that retrace with all that activity there. And it's a pretty heavy move back up, because we have a lower high, slightly lower high, and then we have a higher high. So a lot of people are thinking, as I was, maybe the trend has changed and we're continuing up. And no, they use that strength to sell it down. Blue professional bars come in here, sell it down hard, bang, and this thing just falls for the rest of the day. Let me just get that back. So there we go. That was the perfect entry, kind of short into that move, and I was short there at 58.75. Bang, and took profits at 46, kind of down here, when we had a blue professional bar come in, exhaustion, sell, and bullish divergence. So I thought I was kind of good getting out at that point, but no, the trend kind of continues down. Better sine wave, flips the right way, gets us into a downtrend, and then follows us all the way down. And the next time we see blue professional bars is at the exhaustion low, kind of down here at 25s. Blue professional bars picking it up here, and then they pick it up here, and they're very anxiously picking it up at this point here. You can see here, because they start buying up everything that's sat in the queue kind of above them there, and that was kind of the low of this move. So that's a pump and dump trade. Professionals pump it up and then immediately kind of dump it like that. See those at highs for going short at that point. Now, if you've got enough gumption in you to kind of follow it all the way down, good for you to get out at the lows of those blue professional bars, and we flip into strength and uptrend at that point. This part of it was good for me for 12 3/4 points, so I was quite happy with that. Made one on this one, but then I lost 3.5, kind of on that retracement kind of trade there. So, at the end of the day, it was a profitable trade, combination of trades, but I didn't play it particularly well, so kind of kicking myself that I didn't wait for this activity or just, stick with the signals. Sometimes it's hard, just like I'll overthink my signals instead of just saying, look, this is just, a dark patch going on here. The trend will reassert itself when everything kind of comes together. If that trailing stop had been busted on the upside and this had flipped into an uptrend on better pro-am, then that was when I should have got out of a trade. But I should have been holding my short all the way through there because my entry was good. Then let us look at the flip side of a pump and dump trade, which is a V reversal trade. And I'm going to show you that on the 15 and 45 minute charts. So here's the 45-minute chart, and here is the activity I want to show you that we've been seeing over the last few days. So I think the last time I put up a video, we were talking about an overshoot that we'd had, and that breaking through 2800s was going to be absolutely key. That it would be the signal that we were changing into a downtrend, having had our retracement. This happened over kind of 2 days activity. One was the late part of the day when the market kind of sold down here, and then the early morning it kind of kept on going, and we got that breakthrough 2800. But I did say in that video, if we broke back up above 2900, then that kind of negates the trade, kind of start to go into an uptrend, and that's exactly what we have. But here we go. This is the pattern that we've actually had that puts us into that reversal point at 2800. And it's a V reversal. You can see the professionals kind of selling it down at this point, picking it up as they go, and then anxiously picking up everything that's sitting in the queue, the stack kind of above them there. We get a V reversal at that point, and that's what set off this kind of move to the upside that we've had in the last few days that seems like it's endless and will continue going until I don't know, get exhaustion patterns and blue professional bars and so on. We could also see the same thing going on in a couple of different days on the 15-minute chart here. So you can see that activity I was just showing there on the 45-minute chart is going on here. So that's a V reversal at that point. It's not kind of going on here. We keep on breaking through those lows. We don't change the trend at that point here, but we come down here. That's when we get the V reversal. We change into an uptrend, bang, kind of goes the other way. And then it was actually with, I think probably yesterday's activity was that, where we had that pretty steep sell-off in the morning. And then we've got a V reversal pattern kind of going on here. Same thing, bang, bang, bang. Continuation of an uptrend here, but it's the same kind of pattern, V reversal. So lesson for the day is just follow the professionals. Like, they control the market. It's just a question of seeing through what they're doing, their shenanigans. And at this point with today's activity, they were not kind of buying a breakout to new highs. They were pumping and dumping. So just look out for that trade. In terms of where we are, just to look at the daily chart on the cycles. Here, this is at ES continuous contract day and night, and we've busted up now through two resistances. So this was the last point of turning point that I was looking for. We get an overshoot of the lowest time frame that gets caught by the highest time frame here, and we started to go down through 28, but then we came back up through 29. And now that we've broken up through resistance on these two time frames here, we're going to have to see a pullback to end of trend on the lowest time frame at least. That's what my rules would kind of suggest, and we'll have to wait till maybe this plays out with the support to resistance on the highest time frame. I don't know. It's tricky to call on the daily chart here. This is the retracement that everybody's kind of hating because everybody wants to go short at this point, but in effect, that's the emotion that is driving the market higher, is everybody trying to short it and expect the market to retrace the lows. So because we've gone through two resistances like this, it means it's strong, and so it's going to run a little bit. So we might have to wait till we see blue professional up bars and exhaustion stuff, patterns like that before we kind of roll over. Anyway, play it by day, see what kind of goes on. I'm enjoying my trading at the moment. Hope you are too.